All right, good evening, ladies and gentlemen. Thank you all for being here once again. My name is Vitali, and I will be going briefly over last week's lesson, and we will dive right into today's lesson, which is the basics of chart reading. I want to remind you that everything I talk about today is my own opinion and the manner in which I trade, and it is for entertainment purposes only. I ask that you trade your own plan and plan your own trade, and do not take any of this as financial advice. That being said, once again, good evening. And I want to remind you there is a 20-second delay between my input and my voice and what comes up on YouTube stream. So please be patient. If you have any questions, throw them in the chat, and I will get back. I will get back to you as I see them. So let's go ahead and dive right in. Awesome. I apologize. I just want to make sure that everybody can hear me in the chat. Okay, thank you, MI60. Again, there's a 20-second delay. Please remember that. If you hear me say something out of sync, I appreciate it. All right, awesome. So let's dive right in. Today we're going to look at Bitcoin. It really doesn't matter what asset we take a look at. It just so happened to dive on us as we tune in today, but that's all right. We expect Bitcoin to make small corrections. But I believe the trajectory is still up. We still look fairly healthy. I want to open up. I remove all indicators. Actually, I already did that as everyone was waiting here, and start fresh. Basically, as if I have just installed TradingView and I am a new trader. We're going to start with the basics. We're going to first talk about opening up indicators, and then we will talk about candles, what they mean, how to read them, and we will get into several different time frames. So let's imagine I just downloaded TradingView. I have it up here. For me, I have the premium version so that I can open up multiple indications, and I also need to use it on multiple devices. I believe the limit for devices per account is 2 if you have the free version, and the indicators are 3, a limit of 3 indicators for the free version. So if you use the 200-day or 200 period moving average and the 50 period moving average, and then you pull up the relative strength index or the RSI, you will not be able to pull up any other as far as volume or VWAP, any volume indicators, any secondary oscillators. So keep that in mind. For those of you who want to utilize the free version for now and are just playing around, you will be capped off at 3 indications and 2 devices. So for most of you, 1-2 devices plenty. For me, when I'm on the go, I open up my laptop. I have it on 3 different desktops and sometimes on my phone. So without further ado, let's hop right in. So as I'm looking at this chart, perhaps I want to open up the moving averages. I apologize. Turn up the volume a little bit here for you. Okay. So to open up the indicators, first of all, I believe when you, it's been a while, I don't recall, but I believe when you first begin TradingView, open up TradingView, you will not have any time frames up here. I believe it will default to the daily. So just to the right of your ticker box, you will have a D or an H for hourly, and so you will need to please follow my cursor as best you can. I know the contrast is not the best, but when you first open TradingView as a new account, you will have to click on this drop down, and then you will see the preset time frames here. For those who have the free version, you will not have the seconds. You will start at 1 minute and go over to down to 1 month. And so what you want to do is you want to hit the star for your favorites, and every time frame that you star is going to show up here in the time frame window, the quick window. So personally, I star the 1 minute, which I seldom use, but the 5 minute for scalping, 15 minute for scalping or day trading, and then I star the 30, the hour, the 4 hour, the 6, the 12, the 1 day, and for those of you with the free version, you will not have the 2 day or the 3 day, so you can go from day to week and star. Going back, the 1 minute, 5 minutes, 15, 30, hour, 4 hour, 6, 12 if those are available, and the 1 day and the weekly. For those of you with the paid versions, you will be able to look at the 2 or 3 day, which is pretty much the 3 days is your half weekly, so that's a good one to look at. And then you will be able to select custom time frames down here. You select your value and your time frame, and it will add it to your list. So that is how you select the time frames, and once you complete those and star them, they will appear up here in the time frame window, as you can see, my 1, 5, 15, 30, hour, so on and so forth. Now for the indicators, chances are if you're creating a TradingView account, you will not yet be familiar with the indicators, as you are a beginner, and we will get into those lessons later. But for the time being, I'm going to introduce you to the 3 or 4 most popular ones, and I will show you how to pull those up. So once again, you will hit the drop down arrow on the indications. In my case, I have the favorites here, but as you are in a new account, chances are you will not have any there. So you will have to click on indications and select from your favorites, which you should not have any until you have starred them. Hit the star. But for the time being, we will go to public library, and here in public library we will start with the relative strength index, also called the RSI. So we will place it in here as we begin typing. That's the neat thing here, is it's an adaptive search window. So if you don't know what the indicator often is called, as long as you can get 2-3 letters correct, it will probably find it for you, and then you can select it from your list. So for the relative strength index, as you can see, mine are starred, but I will show you what it looks like by default. And once you pull up the relative strength index, you will have the opportunity to highlight over it and hit the star, and now it will show up in your drop down on your favorites. It will be one of your first indications here. Now, I don't necessarily use these in my favorites. They're just common indicators that I like to peek at or play around with. So I have to put a note in there that it doesn't have to be the indicators that you always use. You can fill up and populate your indicators, quick indicators drop down, even with indications that you are not going to use commonly. So to add a second one, we will go to the MACD, and we will star it, as you see here. And there are different variations. Generally, you want to just select the default, just a general. These are all variations from different authors and different creators. And often I found that the one with the most likes is not necessarily the best, but it's usually the cleanest and the one that is usually your best bet to try it out. And you can go ahead and try out many indicators and see what they do and how you like them. They're all authored differently. They are all illustrated in different ways. So that's just going to be something you select out of preference. So I have starred the MACD and it will appear in my favorites drop down. Next, I'm going to select the stochastic, which is another momentum oscillator. And again, I will star it. Now the stochastic and the stochastic RSI are two different indicators. The stochastic RSI has a formula that combines the stochastic and the relative strength index, and it is a far more sensitive indicator than the stochastic. It generally will move to the opposite limit far quicker and with far more sensitivity than the regular stochastic. And there are some platforms out there that have a full stochastic, slow, and so you just want to select the regular one. And once again, star that, and we will move on to our moving averages, which are probably my favorite and the ones I use the most. Now, without getting too far into exponential and simple, I'm just going to briefly say that when you search moving averages, you will get a standard moving average that is a simple moving average, which means it weighs all the price action in history equally. So if it's a 100 period moving average, whether it's the 15, it'll take the last 100 15-minute candles, and it will take the average price of the close on each one, and it will divide it into the amount of candles. So it's very simple. It's the amount, the price divided by the amount. Exponential is a little bit more tricky. It takes more weight into recent price action. So exponential moving average is similar to how a nonlinear graph or log is down here. In logarithmic mode, the y-axis is not proportionate, so it will give you more detail in different areas. So the y-axis is not proportional. That is all you really need to know at this point. Whereas if you remove logarithmic mode and go into linear mode, the y-axis is always proportionate. So as you see the drop here and the rise here, it is directly proportionate. All these movements are directly proportionate in percentage and in price. And so in logarithmic mode, the y-axis is not proportionate. As we can see here, if we go on the daily and we zoom out on Bitcoin, from this bottom to this portion is roughly $3,000, which is about 50-60% of the chart visually, and from this portion to here is another $17,000. So this last 50% is 4 to 5 times larger than this one, and that is basically to if this portion here, let's say it is only $1,500 and we still need to see the detail, the logarithmic mode will ignore the heavy top and it will give us details so far as we are panned over. We will continue to see detail, versus in linear we will not be able to see any detail here in these $100 moves, and we will be able to see a directly proportionate chart. So if I divide this bottom and this top into quarters in distance, well, it will also be quarters in price. All right, so with that out of the way, that is logarithmic and that in linear modes. And please pay attention to which one you are. They will chart differently and the lines will show up differently. Your targets will be different your channels, your support lines will all be different in logarithmic versus linear mode. And once again, to recap, logarithmic mode does not give you equal weight and price. It allows you to look at small windows in detail as you pan or as you select them in your field of view. And non-logarithmic or linear mode gives you a perfectly proportionate y-axis. So everything is proportionate as you see it. All right, awesome. So we got into logarithmic to quickly touch base on that because we were talking about EMAs. And EMAs, exponential moving averages, are similar to logarithmic mode. They give you more weight. They weigh more of the average of the recent price. So the farther back you go in price on that 100 period moving average, if you're on the 200 EMA, the less weight it will have in its formula. Whereas the simple moving average, or just simply the moving average, which is also known as the SMA or simple moving average, it is direct proportionate. It is a simple formula of the price divided by the time period. Okay. So now that we have selected and started our moving average, I believe we're ready to begin. I do believe the volume indicator will be default when you open TradingView, so you don't have to worry about that. That is just your basic volume down here at the bottom. That is directly for that candle, that time period. So this is the volume. This long green candle here on October 26th, since we're on the daily, is the volume of this green candle on that day. And so you don't have to worry about the volume, but do play around with these indicators and strategies and take a look at. There are many good ones out there, very good authors. So we will close this out, and I will go and add my indicators to my chart. Typically, I will have 3 moving averages for my 200, 100, and 50. And there's also a popular 21 period moving average, mostly for the weekly guys, and then guys and gals. And then there's a 10 period moving average that is very popular in the stock trading and in the Forex sectors. So again, those are the 200, the 100, and the 50 period moving averages. And we will talk about that briefly after I add them here. Okay, awesome. And you do not have to flood. Many traders only use 1 or 2 momentum oscillators, but for the purpose of this instructional video, we will keep all 3 of them up. And I do often look at all 3, especially I look for them to line up, for them to tell me the same story when I want to confirm a move that I feel is opportune. So with these indicators, if you find yourself wanting to have one move to the top, you simply would move your cursor up to the right side, the right upper box. So every indicator has its field of view here for the RSI, and they are denoted here by the 80 and the 20. This would be your 0, and your 100 would be up here. You can also move these change this y-axis view here by just clicking, holding, and sliding down. You can get the 100 to appear. However, some people do not really care to see the 100. They would rather see more detail, or they would rather see this medium zone here be in greater detail or zoomed in on. So you can zoom this in and out, and that way you can see your 100, your 100% oversold or overbought, 100% overbought or 0 oversold. And so if you want to move, if I want to move the RSI, I will click on the up arrow. It will slide it up above the stochastic, and then one more time slides it up to the top. And then I usually will keep my stochastic below that, and my MACD at the bottom. All right, so that is that. You can also shrink and move these as you please here, these field of views. That is up to you. I would keep the defaults for the RSI at 14 close. That is pretty much industry standard. There are a few traders that will alter that, but if you want to see what everyone else's majority of others are looking at and trading off of, they typically leave that default at 14 and the stochastic at 14, 3, and 3. And that is basically your opens and your closes, your default settings. All right, moving on. Now that we have our oscillators, which we will talk about in another episode, let's go ahead and I apologize. Let me turn up my mic. I hope that's better. I don't want to blast anybody. Please let me know if that's better, guys. In about 20 seconds, you'll hear this. Thank you. Awesome. So now that we have our indicators, I apologize about that. By the way, I took myself off of logarithmic because I usually like charts to be proportionate, especially when I'm charting support lines. I do believe that price movement, since we calculate price movement and profits and percentages, and movement in percentages, and we usually will consider the amount of drop. I like to keep my charts proportionate. I very seldom go into log mode or logarithmic mode unless I need to go back and see some detail, fine detail back when Bitcoin was under $500. So I will keep this for the sake of this lesson and future lessons, keep myself in linear mode or off of log. One more thing while we're here, you want to, if you ever find yourself moving your chart around, let's say you shrink in your price, your y-axis, or let's say you shrink in your x-axis, and you want to get back to the default view, which takes your highest price action and your lowest and fits it into the window of view. You can do two things. You can click on auto and select and keep it on, or if I change the y-axis and I want to go back to default or go back to a good stretch on the screen, a default stretch, I can just double click the y-axis or the price, and that will take me back to default view. So a lot of people have this question about moving their chart around and then not knowing how to get back to. Those are the two ways. You can you would have to select auto and then double click on your price action. There you go. Anything I do, anything I change here, goes back to default. And then as I zoom in, it always will stretch out and leave a small margin around my lowest and my highest price as I zoom in. And that's just for efficiency. That's a very good thing that TradingView has done. Okay, so let's talk a little bit about candles and how to read them. So first of all, I'd like to remind everyone in here that you have to have a little bit of math knowledge and be able to convert percentages and prices at the snap of a finger. Otherwise, you might find yourself having a really hard time trading. So for those of you who haven't brushed up, I suggest you brush up because you have to make quick calculations. For example, you have to, if you want to calculate how many how many 15-minute candles are in a daily, you can do quick math, and that'll get you to 96. You want to any numbers any percentages that you might have trouble with, just get some practice. It's everyday use. I find myself using math every single day in trading. Moves, swings, profits. It has to come quick, especially if you're a scalper. So I want to talk a little bit about candles. We're going to keep this lesson very basic, so please bear with me if you already know a lot of this material. So I have myself on regular full candles that you can select here. You can, if you use the Heikinashi or the lines, many of you will probably use the area. I find myself just going to basic candles and using closed field candles. Candles, what are they? They are the price open, lower, high, and close in that 15-minute time span. If we're in the 15-minute, I apologize. In the 15-minute time span, every single one of these candles represent a 15-minute time span. So at the open of every hour at 7:00, a new candle will be formed on the 15, on the 5, on the minute, on the 30-minute, and on the hourly, every hour. If we're at 0700, if we're at 7 p.m. on the dot, the previous candle will close, and at 700 the new candle will open. The body of the candle, this wide, thick region of the candle, excluding the wicks, not including the wicks, is called the body. The one end of the body will be your open price or your closing price at the end of that time. So if we see here under the price and we're on the 15-minute candle, we have 8 minutes and 27 seconds remaining in this 15-minute period. And if we look at our clock, which currently says 7:36, we have exactly that amount of time remaining until 7:45. So it will always line up to Universal Time Coordinated, or UTC in Greenwich. So that is what that little ticker here means. If I go to the 1 hour time frame, that ticker will now let me know how much time I have left on this on the current hourly candle. So this hourly candle will close in 22 minutes. That pretty much also tells me, without looking at a clock, that if I know that we are in the 7th hour, that we will be at 8 o'clock in 22 and a half minutes, because it will always be coordinated with world time, with internet time. And so that's what that means. If we go back to the 15-minute candle, we have 7 minutes left. That means that this candle was opened 7 minutes and 17, or 8 minutes and 44 seconds ago. 7 minutes 44 seconds ago, I apologize. So this line here, the top of the body, should match, and I say should because due to time slippage and errors on exchanges and engines, you will find these bodies, theoretically, they should always line up, because at the exactly precise time that the previous body closes, here in the green, is when this one should open. But you will often find on different exchanges that they don't always line up perfectly, and that's just a slight time error or latency, and that's all right. But generally, we just need to understand that the body is the opening and the closing. Now this candle is still going to move around and create possibly longer wicks because it doesn't close for 6 minutes. So where this candle opened here, it can still turn green and go up from the opening price. But currently, because it's still an active candle, it's still writing itself, it will remain red so far as the price is under the opening. So to review candles, the body of the candle, the thick region, is where the price opened in that time frame, in that time period, and then where it closed in that time period, and the next candle began to form. What are the wicks? The wicks are the time, the price extension to the farthest high and the farthest low in that time frame. So in this 15-minute window, if I'm on the 15-minute, and we'll take this 15-minute candle, in this 15-minute candle, just visually, I can estimate that the price opened at 67.15 and closed at the end of that 15 minutes, closed at 66.23. However, inside of that 15 minutes, the price did go up as far as 67.17. So about $2 higher than it opened. And then inside of that 15-minute time frame as well, the price did reach all the way down to 66.05. Now that is an estimate based on our cursor. If we would like to see the exact price to the second decimal point back, or to the penny space for if this is Bitcoin, we can go up here to the candle information, and up here, these are what these lines are. You will see the letter O, H, L, and C. O is for open, H is for high, L is for low, and C is for close. So the price that the candle opened, the highest it reached in that time period, so for the 15, the candle that I hold my cursor over, you must hold your cursor over that candle and then go read the data. And let's do that. We'll keep our cursor here on this on this candle, and we can see the exact information at the top left, that this candle opened at 6,715 and 2 cents. It reached a high of 67.17 and 89 cents. It reached a low of 66.05 and 89 cents, and closed at the end of that 15 minutes at 66.23 and 72 cents. And that's, ladies and gentlemen, how we get our information on our candles. So, quick review. We'll start at an arbitrary random candle, and we'll work our way forward, reading the story of the price action. We will start here on April 15th at 1 p.m. The price opened at 67.81. Did not go any higher than the open during that 15-minute span. It did reach as low as 66.95, went back up before the close of the 15-minute period, and closed at 67.29. At the end of that 15-minute period, when the time ticker gets down to 0, that candle closes, and since it closed at 67.29, the next candle should open theoretically close to that. 67.29 is the O up top on our candle information on this next green candle. Now the reason this candle was red is because it dropped in price between open and close. If the candle opens and rises in price to the next close, it will be green. So where this candle closed and the price dropped in that 15-minute span, it opens, and in the next 15-minute span the price climbed and closed at 67.43. Likewise, the next 15-minute period, where this candle rose to 67.43, the next one opened at 67.43, reached a high of 67.50 within that 15-minute time span, then reached a low of 6,700 and closed at the 15-minute mark at 67.14. I take it we've beaten that one dead, so I will not go any further. I think it's very clear. If anybody has any questions on candles, please hit me up in the chat. I will see it in a few seconds after the delay, and I will get back to it. Moving on. As I look at this 15-minute chart, one second, I apologize. As I look at this 15-minute chart, and I want to see the general price movement, let's say throughout the day. So we will go to the edge of the 15th, and today's the 16th in our time zone. So we will look at today's span. From the start of the 16th, which, by the way, the daily close UTC is in 15 minutes. I have my chart on local time. The start of the 15-minute and back 96 candles will be a day. Where did I come up with 96 candles? Well, if we take the 24 hours in a day and multiply that by 4 15-minute periods per hour, we get 96 candles in one day. We get 96 15-minute candles in one daily candle. And there's going to be a perfect picture painted if you zoom in on the 15-minute candle. If you look at the daily candle, the information that you will get from the daily open, high, low, and close will perfectly match the 15-minute candle when zoomed in. What do I mean by that? So if I go back 96 candles from daily close to daily close, so since the daily close will be in 15 minutes and one more candle, I can go ahead and we can pretty much go 96 candles back, and we'll look at the start of the day today. We can see that in one day here, in this period, our highest price that we reached in this entire day was up in this region. It looks like it's this candle, and if I go to the candle information, we look at the high as 69.40. 69.40. If I go to the daily candle, we are in this daily candle that's, like I just said, closes in about 15 minutes. We will see on the information that our high, right here, our high on this candle was 69.40. That is the top of this wick. The top of this wick on the daily will be the highest wick and candle inside of this daily period. So if the day started right here, this is our highest point, it matched on the daily wick, and this is our lowest point. Unless this candle that's still drawing itself for 11 minutes, unless it stays, as long as it stays above this lowest low of the day, we can go here to the candle information and see that the low of our lowest wick of the day was 66.05, and we go back to the daily, and we see that in today's candle, the lowest was 66.05. So, ladies and gentlemen, I just want to make sure everyone understands that how the time frames are relative to each other, and how they are just a more zoomed in version of the next time frame. So there are 96 of these 15-minute candles, 96 of them candle. There are 24 of the hourly candles. If I go to the hourly time frame, 24 of them. Granted, I align my time from beginning of day to end of day. There will be 24 candles, hourlies, in one of the dailies. And in the same manner, there will be 6 4-hourly candles in a day. So if I pick any one of these random daily candles, pick any one of them. This one. And I take my information of my high, my open, my low, and I go back to the 13th, the 14th of January, down to the hourly or to the 15, the information will be the same. The highest wick, the wick of the highest candle on that day will be at 88.93. And the lowest wick will be at 81.05. So ladies and gentlemen, the smaller time frames are literally just a zoomed in version of the next larger time frame. So if I'm a day trader or a scalper, it does me really no good. We will get into that on another lesson. I do want to look at the daily even as a scalper to see the general trend, and be more cautious if I'm going to be scalping against the daily trend. But it really doesn't, outside of that, it doesn't do me any good to look at the daily if I'm scalping or day trading. I really want to be looking at the 15-minute or the hourly, because the daily will give me a general trend, but I do not see enough detail inside of that to be able to plot my moving averages, to be able to get any kind of useful information to enter a position or exit a position. Now, I did forget to set up my moving averages. I apologize about that. Where we discussed the oscillators being defaults, and typically we leave them at those defaults, the moving averages are going to be quite different. We can either double click on that, on one of our moving averages up here, or we can click the settings tab or the hide show button. So let's adjust our time, our periods on our moving averages. So we already discussed simple moving averages and exponential briefly. Now we're going to set the most common time frames that we use. And to do that, we double click or we select the settings button. We go to inputs and we select and we put in 200 period moving average. So if I'm on the daily, this will be the average price of the last 200 daily candles. I will leave the rest as defaults and then go select my color. The color doesn't really matter. You can pick anything that you can easily reference, and then you can select your thickness and your transparency or opacity. I like to leave my moving averages at 50 opacity. That way they're not super contrasting on the chart and they're not popping out and distracting me. And yet I can see them when I need to find them. And then I leave my thickness, usually my preference is at the lowest. So I have my 200 moving average. Next I will go to my next default and I will select my 100 period moving average. And I will make that yellow. Next I will go to my 50. And make that green. Awesome. And we will have a lesson on moving average. Today is just the basics of chart reading and setup. We have covered, again, how to start from a blank chart. Please go back and review the video if you need to once it's uploaded. But this is basically how you set up your time frames, your indicators, your moving averages. And you can also play around with the settings. You can select your appearance. You can make your background darker. A lot of folks are not aware how to add the watermark of your ticker. So right here you would select watermark and then pick your color and opacity here. And that will leave a watermark on the background if you so choose. We have talked about how to reset the chart if we move around with the y-axis and the x-axis and we want to get it back to stretched out to margins by default. Once we have moved the y-axis, we can just double click on it on the y-axis and it will default back. And we want to make sure we have auto selected. That way the chart will continue to move as the candles get drawn versus the candles getting drawn and then they hide behind outside of a field of view. So auto will allow for it to continue to move at whatever margin you set. If I set this as my margin, it will continue to draw candles and it will continue to leave this margin. I've even made it a habit to always, it's a habit of mine to always double click on the y-axis just because I move the charts around a lot. So that's not a bad habit to have. All right, folks, I hope I've covered everything. I know it was just the basics. We will get more into charts as we continue our lessons. If you guys have any questions, please drop them in the chat window. I really appreciate everyone's time today. I hope this was useful. Please don't forget to hit like and hit subscribe. I really appreciate it. We are a zero obligation stream, and I really appreciate everyone's subscriptions. I hope everyone has a good evening, good morning, good day, wherever you may be, and blessings to everyone. Stay safe.